Hey, so obviously the Bitcoin ETFs have been approved, and CPI is tomorrow morning, which on the Meet Kevin Market Open live stream channel, link down below, we already have the link for the CPI live stream we'll be covering together. But I just wanted to have a transparent and I Ubered home, I promise. Slightly Mai Tai'd conversation with you, mostly based on just sort of an overall synopsis, I don't know why I'm holding this, of what's been going on with consumer prices and producer prices. And I have to say, we're looking at Kroger, Celsius Analysis, Build-A-Bear, machinery companies that are making machines. We're looking at Carnival Cruise Lines. We're looking at Airbnb, Lemonade Insurance, Nike, Micron, Peloton, these companies I'm mentioning, Ulta, Instacart, Costco, deflation. Okay, literally, Costco deflation is right. Restoration Hardware, Broadcom, Oracle, American Express. These JetBlue, these in the last month, literally the last 32-ish days, are the analyses that we've done in the course member live streams. And I just want to give you the synopsis here. Okay, look, I understand not everybody wants to be a course member and hang out with me every morning. There are some folks, and I respect it, I get it, who watch my channel who are like, look, I can have my daily dose of Kevin, but I can have no more. And I get it. I know sometimes we can be a little overbearing, and by we, I just mean I. But tomorrow is a big day. Tomorrow is CPI, January 11th, 2024. We are going to have to price in Jerome Powell's activity for January 31st. Now, obviously, with this kind of insane event coming up tomorrow, we'd be crazy not to offer a coupon code expiring soon on January 31st for the amazing gold course link down below, or the other courses on building your wealth with bundle codes if you email us at staff@meetkevin.com. But beyond that, no, we actually have to talk numbers. Look, listen. This is JP Morgan's analysis here. And I just want you to know for a moment that we have still not yet seen the Fed wield a critical sword. We're going to talk about this JP Morgan analysis on screen here. We've touched on it a little bit in the Market Open live stream this morning. But I just want to be clear. And I don't think people understand that I have this belief, this like really, really strong belief within myself that I know things are volatile in the market and in the economy, but my goal, as much as possible, is just to be long-term right. I think anybody wants that. Any self-respecting man or woman wants to just be right over the long term, right? I think what happened in January of 2022 and how we've set up for the long-term future will end up proving to be right. There is a reason I've structured my actively managed ETF in a specific way. There's a reason for that. And there's also a reason I've made very little changes to it. But my belief is that the Federal Reserve very soon is going to wield the sword of flexible average inflation targeting very soon. I think that layoffs are going to mount to such a level and GDP growth is going to mount to such a level that the Federal Reserve will really face no choice but to print money. Yes, it's a giant Ponzi scheme. Listen, we're going to drop an interview soon with Lauren Southern. Okay, some people are going to respect that. Some people are going to get pissed. But probably this weekend, we are going to drop an interview with Lauren Southern. She is, again, people are going to get mad at me saying this, but she's an amazing person. She, like, inside and out, everything about her. She's great. She's beautiful. She's wonderful. My Lauren knows this as well, okay? So this is not a secret. Lauren Southern is basically canceled by the internet. She is deemed an alt-right extremist individual who's like white people lives matter or whatever, like that kind, right? Like hold the gay pride party outside the Muslim mosque just to cause tension kind of style, right? So that's inflammatory. That's called poke the bear. I've done my share of poking the bear. But my point is, Lauren Southern, in person, asked me point blank, and I wanted to share this because I thought it was an important moment. So we're sitting at breakfast. She's got one of her friends, her employee, and her, and me. Says, so, our economies and our governments have been propped up by a lot of money printing, Kevin. And you're an econ guy, so I want your opinion. I want to buy a house at some point because obviously any self-respecting individual at some point gets sick of renting. And I want your opinion. When is this Ponzi going to collapse? Because we can't continue to print money like this forever. And so my response sort of made her jaw drop. And that was that, first of all, I agree. We are in a bizarre Ponzi where you can literally print money and have people just accept that you just diluted the crap out of them. It's the hard reality. Any libertarian or Austrian economist right now is like, God damn, I didn't know I liked this annoying guy, meet Kevin. Hell yeah, right on. Yeah, I know. They're right. It's a Ponzi. But this is where I lose them. I go, but it could keep going for 100 years. And that's the moment Lauren Southern looked at me. What? Yeah. I think that whether it's the manufacturing of the data, which I'm not that jaded. I'm very jaded, but I'm not that jaded. Whether it's the manufacturing of the data, which again, I'm not that jaded, or it's just the reality of the economic system we face, we are going to go into a state where the Federal Reserve will soon be announcing, and I've been saying this for 2 years, you know this. If you've been watching the channel and you wanted an economic perspective, you know this. We've been talking about flexible average inflation targeting. It literally stands for FATE. And it is an ironically creepy statement that I should have faith in Jay Powell. I'm telling you, very soon, I guarantee it. Very soon, people are going to name their children after Jerome Powell. I guarantee it. And very soon, people are going to make statues of Jerome Powell outside of their houses. I guarantee it. I guarantee you both of those things. Guaranteed. 100% guaranteed. Call me in a year. Hold me to it. That's because I think Jerome Powell will be able to orchestrate this soft landing by turning the money printer on again and keeping the Ponzi going. The Ponzi of deflation will actually come upon us. T.S. Lombard. We're going to get so mad at me when I do this. So, T.S. Lombard, our resident Bears, they actually just did a fantastic piece. They did a fantastic piece, and I don't know why I can't find it right now. But they had a fantastic piece. I read this while I was flying back yesterday from Park City, Utah. Boy, we missed a snowstorm by about 20 minutes. The airport shut down in Salt Lake City last night. And we would have been trapped in Salt Lake, which honestly wouldn't have been that bad. I love Salt Lake. Had we not been able to get out of there. But T.S. Lombard yesterday had a piece. Again, I can't find it right now, but I have it relatively in memory. Actually, it's on my phone. T.S. Lombard had a piece that deflation is coming. But the way they set it up was very interesting. They argued that the markets might be wrong again. That was their line. And I'm like, oh, that's a juicy headline. What do you mean the markets might be wrong again? The title of the article is literally, Is Everyone Wrong About Inflation Again? I found it. So I had my iPad in the trunk of the plane. Okay, that sounds really weird, but I'm sorry, it's true. So I had my iPad in the trunk, and I'm like, dang, I guess I only have my iPhone, so that's why it's not synced over there. But anyway, T.S. Lombard, our resident Bears, they argue that there are two potential realities. That right now, consensus is that inflation will settle at 2%. And the other reality is that 2% will actually either go into substantial deflation or geopolitics will push us into a second wave of inflation. And so I thought this story was really interesting because they basically expressed that they're frustrated that consensus is now 2% inflation. Everybody thinks we're going back to 2% inflation. We're going to get flexible average inflation targeting, and everything's good. Everything's going to be just fine. Oops. Well, if that happens and the consensus is indeed 2%, what does that mean for stocks? Well, it probably means people price in rate cuts and rates come down. Okay, fine. But wait a minute. If geopolitics push inflation up again, we're going to have a problem. The market's going to fall. If inflation tomorrow comes in dirty, as in hot, we're screwed. Okay, right now, tomorrow we're expecting 0.2 on the year over year. 0.2 on the month over month, 0.3 on the month over month core, 0.32 on the month over or the year over year, and 0.38 on the year over year core. And when we zoom into the core month over month, we can actually get the perfect average here and find that the average is 0.25, which rounds up to 0.3. So we really want to get 0.2 to come in low on that. That's currently the consensus estimate. That's not what JP Morgan thinks. JP Morgan has their own estimates, which we'll pull that up as well. But my point is, if we get a soft read, we're going to get a market that starts pricing in more and more rate cuts. And the market might not be wrong. That's the scary part, is the market could be right. A capitalistic economy. People forget this. And I want to be very clear about this. A capitalistic economy reduces prices. What did I say? With all those earnings calls that I mentioned, they're all complaining about falling prices. If I didn't make it clear then, all of them are complaining about prices coming down, trying to provide more value to customers without raising prices. Nobody is screaming we can raise prices right now. I do not see a second wave of inflation coming from earnings calls. That does not mean that could change. That can't change. It's entirely possible that changes. Entirely possible. But it's just not what we're seeing right now. So, JP Morgan obviously has an estimate. They always have an estimate. This is not a big deal, okay? JP Morgan having an estimate is literally like screaming that the Pope is Catholic, okay? Duh. We know that. It's literally like saying the Mormons like, Diet Coke. So, what are their estimates? 5% chance of a 0.4% read. That's not going to happen. That's not Kevin's estimate. 25% chance of a 0.3. Yeah. That is a good shot, but I don't think so either. 45% chance of a 0.2 to 0.3. Okay, so if I wanted to be safe, I could just tell you right now, I think we're going to have a 70% chance of a 0.3. I don't think so. I don't think so. Kevin's consensus estimate, okay? And so when we say consensus and Kevin in the same sentence, it's just basically what Kevin's opinion is, okay? So let's tell you what the market is, and then I'm going to write down right here because I want to be held accountable. Because unlike most people on YouTube, and I'm not trying to bash anyone individually, I'm just trying to be real. Unlike most people, nobody wants to be wrong. Okay? I don't give a shit. So, these are the numbers for tomorrow. This is the consensus estimate. All right. So, which are the core? That's core. That's core. Obviously, the bigger ones are year over year, okay? You ready for my take? And then we can deduce the year over year from that just by doing math. But I actually think we're going to get double twos. And just to keep it simple, I'm going to just give you those two. 0.2, 0.2. I want you to think like double twos. So 0.2, 0.2 is my estimate for tomorrow. It's just based on the earnings calls that we are reading on a daily basis. And I'm serious. In our course member live streams, we do these every single day. We've done them for over 5 years, okay? Course member live streams have been out for a while. Not only do we do the companies that we mentioned, but many more. And it's really fun. I mean, the Celsius today, or whether it's our Pinterest, MasterCard analysis, our aerospace stock, Nvidia, Intel, Uber, Walmart, deflation. It doesn't matter. Ubiquity, Palantir. You want to see real fundamental analysis. It's freaking amazing. I hope you're there. But my point is, I don't think we've seen a market yet that actually respects the potential for deflation. We are trending towards deflation. I think T.S. Lombard is right. We're trending towards deflation as a risk, and markets have not priced that in yet. And that sets us up for... I'm going to be really clear about this, and I don't think people are going to believe me, but people are going to think I'm saying this because, I'm biased. Because I have such exposure to those sectors, but it's so simple. You need to buy assets. Buy assets. Not financial advice, okay? Buy assets. Real estate and stocks. In 10 years from now, when we are facing negative interest rates, you're going to go, why wasn't there someone on YouTube who said, buy assets, because they're going to keep this Ponzi going for 100 years. And Lawrence Southern's jaw dropped, going, what the hell? They're going to keep this Ponzi going for 100 years? Why wasn't there anyone on social media telling me the Ponzi can keep going? Everybody's worried about debt and the second wave of inflation and fiscal irresponsibility. Why wasn't there a single person telling me it can keep going? There was. Sorry. Some people are going to be like, man, this guy's lost it. It's unhinged. No. I believe so wholeheartedly in what we're doing that when I meet people in person and I explain what I believe is going on in the economy, people are like, Kevin, how can we partner with you? Doesn't mean I'm going to be right. But I want to be crystal clear about my opinion. I don't want anybody in the future saying Kevin wasn't clear about his opinion. We are trending towards deflation. Not only are we going to trend towards deflation, but the closer we get towards deflation, the more the Federal Reserve is going to print money. And the Ponzi will keep going. So all you Austrian economists who are like, this is effed up, you are right. And all of you Keynesians who are like, they're going to print money, you are also right. You're both right. The difference is asset prices are going to keep going up, in my opinion. I could eat those words, but at least I have the balls to have an opinion.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate an actively managed ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker.